Welcome back to another episode of Happy Half Hour. That's Toby Weber. I'm Nick Shermans, where we talk the economy, markets, and life. And today is February 4th. It's freezing cold. There's no shortage of things to talk about with the streaming flow of news on tariffs, AI, the markets, all that. Toby, where would you like to start, sir?
I think we should start with the tariffs because I know it's your favorite subject. So the new administration levying tariffs against Mexico, Canada, China. So what is important out of that from your perspective, and what, if anything, should we consider when we think about portfolios and markets?
I wrote about tariffs a couple weeks ago. Tariffs are complicated, and as quick as tariffs were rolled out against Canada and Mexico, which were the bigger deal, and I'll explain why, they were pulled back. And this is not uncommon. And I think just the whole debate, I think it's untradeable. It's untradeable to try to make portfolio changes based on the whims of a president that has proven that he likes to negotiate, put stuff out there on the extreme, then pull it back. So it's a very fluid situation. I think it's more of a distraction. So we talk about the signal and the noise. I think tariffs are quite noisy. And as I've alluded to, the most important question is, will the massive bet in AI pay off? But folks get sucked into the political vortex and they can't help themselves. So tariffs are just going to be in the backdrop going forward for the next 4 years, most likely. And I think they should mostly be ignored. And I know that's might not be the answer folks want to hear, but I think that's the most reasonable answer. How about you?
I think it's the only thing I take from it is it's further evidence that with this new administration, not unlike when Trump was in office previously, there's going to be a lot more volatility. And you come in on a Tuesday and some tweet gets sent out and all of a sudden the markets are reacting or trying to understand what he's talking about. So I just think that we're in for a period of more volatility compared with what we enjoyed a relatively low volatility period the last couple of years.
Do you know what percent of Canadian exports out of all their exports go to the U.S.?
35%.
76% of Canadian exports end up in the U.S. Can you guess what that percentage is for Mexico? All Mexican exports, what percentage end up in the U.S.?
67%.
83%. So that's why the market reacted so violently over the weekend. And then today and at the end of yesterday, they kind of reversed. China tariffs are still there. Guess what percentage of Chinese exports end up in the U.S.?
81%.
14%. So China is less of a big deal. And I think it used to be a bigger deal. But post-COVID, we've reshored, we've moved supply chains. So China's become less of a trading partner to the U.S. Canada and Mexico are much more dependent on the U.S. I'm trying to outline what really matters and what's just headline risk. You know, the other part of this, and I know tariffs used to be a big part of the federal budget, now not so much. And President Trump wants to balance these trade deficits, meaning the U.S. buys much more stuff from the rest of the world than they buy of ours, which I think is more of a symptom of how our economy has changed, you know, from 40 or 50 years ago. We used to make stuff. Now we're making less stuff. We're more of a technology services-based economy. The fact of the matter is we're never going to have a balanced budget with the rest of the world. We're really good at innovating, coming up with technology, service-based economy. Other countries make stuff quicker, cheaper, faster than the U.S. So I think the tariff stuff is a little misguided. I get what he's trying to do. By he, I mean Trump, you know, with some of the fentanyl and the border and all that. Like, I get that. But as far as balancing trade, I think that's a delusional proposition.
Okay. So you mentioned we're in the beginning of February. January's in the books. What did you take from the market activity in January? What jumped out at you? What themes are you seeing to start the year? Give me your perspective on what we've seen so far in 2025.
Well, based on the meetings I'm having, like, you would think the world is ending. And I zoom out and look at the market action, and pretty much everything was up. Bonds, gold, Bitcoin, US stocks, value, small cap, foreign stocks. Foreign stocks are actually outperforming US stocks, which is really good to see because, you know, that's one of the things that we've been talking about for a long time is how fully valued U.S. large cap stocks are, and investors would do well to revise their expectations down for U.S. large caps. There's plenty of opportunities outside of that one asset classes that are more beaten down and more attractive. It's nice to see that happening. But things aren't that bad. I mean, when you reconcile what you read on the news and social media and talking to people versus what's happening in financial markets, it's like a pretty big chasm there. So I think folks just need to get off the internet, stop clicking buttons on the internet and go for a walk, go lift weights, go have lunch with a friend.
Yeah, I think maybe what has people a little bit concerned is just, again, volatility. We saw the market go down 6% early in the month and then rebound by 6% to close the month, 7%, something like that. So in my opinion, going to be a different regime. And we just have to be prepared for more volatility. And to your point, I think if we don't follow every tick, we don't follow everything day in, day out, it'll probably get easier to handle the new environment with more volatility.
Yeah, and I can't help but think that folks are still mixing investing in politics. I mean, we just had one of the most polarizing elections ever, and I think people just can't help themselves. They know they shouldn't mix investing in politics, but they sit inside and they're watching news all day and they're getting worked up. And, I've always said that who's sitting in the White House matters much, much less than most people expect. Sure, there's some short-term noise and disruption, but over the long term, the fundamentals are going to win out. Earnings, inflation, consumer behavior, all of those things matter much, much more. But it's easier said than done to filter out all of the political noise because it's in front of us every day.
Agreed.
So I have some questions. I've been writing a lot about AI, and I think that is the most important question. We got a minor disruption about what could be an answer to the AI question. And the AI question is important because a lot of these big tech companies have invested billions and billions of dollars in the AI theme and infrastructure and data centers and all that. The question is that investment going to pay off? At some point, investors want to see a return on that investment. And a couple of weeks ago, we got a wrench in the narrative that AI is going to pay off. An obscure company out of China created a model that's better, cheaper, faster. And it saw some of our high-flying tech companies really sell off pretty aggressively in one day. So what percent of U.S. companies actually use AI in their business?
I'm going to say the percentage that use it is 54%.
So this is a study from Goldman Sachs that just came out, and not a lot of people are talking about it. 6% of U.S. companies use AI in their business. Now, many have the intention of rolling it out more broadly, but those actually using and paying for AI models is quite small. So when you start to stack the pieces together, OpenAI still is not profitable. There's not wide adoption yet of AI. Sure, it's come a long way, but the takeaway is, I'm not saying that AI is dead. We still have a long way to go to realize that payoff. And I think investors tend to overreact and jump the gun and think it's the best thing ever. It's great, but there still is not a revenue model for AI.
Yeah, and I think you're going to have to see tangible financial benefits from AI, whether it be increased sales, to your point, lower cost can be another benefit, but you're going to have to start seeing impact on earnings from AI to really know that it's going to be a moving driving force in the market. And to this point, we haven't seen it. Companies are spending not just billions of dollars, but tens of billions of dollars every year. And I think that there will be a payoff at some point, but it may be different, and the winners and losers may be different than what you might expect.
Yes, and this matters because the 10 largest companies in the U.S. represent 21 trillion in combined market cap. 10 largest companies worth 21 trillion. That's 70% of the U.S. economy, okay? The biggest 10 mega cap companies in the U.S. are larger than China's $19 trillion economy, as well as the GDP of the world's next 5 biggest economies combined. That's Germany, Japan, India, UK, and France. So put that in perspective. The 10 largest companies are bigger than China's GDP, and combined Germany, Japan, India, UK, and France. That made my jaw drop.
Well, and those are the biggest companies in the U.S. stock market. Those are the companies that have been driving performance and outperformance the last several years, the last 5 years, 10 years, really. So if we see something that causes those companies to pull back, causes their earnings to not perform, you could see the overall stock market take a hit because those are the biggest players in it.
Right. And you asked me what other thing I was looking at. So I'm not saying I'm a big fan of this, but a lot of people say as January goes, so goes the rest of the year, right? And there is evidence to back that up. So a lot of folks look to January performance and what that could mean for the rest of the year. So in 42 years since 1953, that the S&P is up in January, The rest of year performance for the S&P 500 was a gain of 13.5% with positive returns 86% of the time.
Perfect.
So over the past 42 years, when January's up, the median rest of year performance for the S&P is about 13% with positive returns 86% of the time. I'm not saying that's going to happen, but if you're a fan of trend and momentum investing, which we have some of those rules in our investment process, that is a potential tailwind.
Good. Let's hope that turns out to be the case. All right, I have a question. We're going to shift gears now. You have a CFA designation. I have a CFA designation. Folks that work in our office have a CFP designation. Talk briefly about what those are, and if you were to restart your career today, would you go get the CFA? Would you get the CFP? Would you get both? Would you get neither? I think there's a lot of confusion around the designations themselves. So maybe spend a minute and explain it and then talk about your experience.
I can't speak to the CFP. I can speak to the CFA. And you asked me about 10 questions in one question. So I'll talk about my experience with the CFA. So the CFA, Chartered Financial Analyst, is thought to be the gold standard for investment management and portfolio management. I started my CFA journey in, I want to say 2007. I took my first test, and it takes 6 to 8 months to study. It's self-study. So one of the things that CFA taught me was discipline. I started in my mid-20s. My friends were all going out and hanging out, and I was stuck inside for 6 to 8 months studying for 500 plus hours for this test. And it's not so much what I learned. I did sharpen my knife and get better at analyzing company financials, and you learn how to value stocks, and you learn about the economy and monetary policy and all these things. That's great. But what I learned about myself is I could sit inside while I was foregoing other more fun opportunities and be disciplined and study. And all of the things that I saw in the news and in my job started to come together as I undertook this journey. And a lot of people compare a CFA to a graduate level degree from an elite business school like Harvard or Princeton. It took me 5 years. I failed one exam. I failed level 2. And there really was a sense of accomplishment. I think there's only like 220 CFAs on planet Earth. And when I got my charter back in 2012, I think there was only 100,000. So you are an elite class of company. At the same time, if I had to do it again, I might not do it again. If I did do it again, it would be when I was single and had no kids and no wife, because it's really hard to balance all of that when you have a family. So I'm glad I undertook it when I did. But given all the, robotics and robo advisors and indexing, I'm not sure if I would do it again. I mean, just the sheer tax of 5 years of your life is a high price to pay, but I would have to think about that more. I mean, I wouldn't trade it, but I can't say that I'd do it again.
Yeah, I think a lot of that rings true with me as well. So I didn't take mine until I got into the industry in 2015, 2016. So at that time, I did have 5 kids and a wife. And so, as I tell people, my brain was older. I wasn't right out of school. So it was a challenge. It took me a little over 3 years to pass the tests. But I'm glad I did it because to your point, it was kind of an achievement, something you had to really work at. I think probably if I added up the hours, it was, as you said, somewhere between 500 and 1,000 hours over the course of 3+ years. So I'm glad I did it. I think the world is a little different today, but I'd probably still go back and do it. But it wasn't without its challenges, that's for sure.
Well, and I think one of the main reasons I took the CFA going back to when I was 20-something, it's really a global passport. So, when I was 20-something, I had the illusion that I was going to move somewhere else. And if I went to Europe, if I went to Australia, people recognized the CFA. So that would likely have landed me a job. But it all worked out. I launched Pure and it worked out great. But one of the selling points is the CFA is truly global.
2 quick stories from my CFA journey. One, I will never forget taking the first test in Seattle. So you had to drive up to Seattle. You're in a big ballroom with hundreds of people. And if you look around, I'm clearly, if not the oldest person in the room, there's not too many people older than me. It really was a lot of people that had just got out of school. So that was kind of interesting. And then the other, you'll like this, my third test, I had passed the first one, passed the second one, took the third one, did not pass, almost passed, but did not pass. And then went back to take the third one. I assumed it was in the same building, the same room. Why, I don't know. So I showed up there, sitting in the same room, same building, The test is not in that building that day. It's in a completely different building. So I'm like, where is everybody? This is weird. Maybe I got the time wrong or something, or maybe I got the day wrong or something. Turns out, no, I'm in the wrong room. So I said, where's the test? Oh, it's over in the cross campus, over in the other building. So I go racing over there. I get the last seat in the room. You know how they have those half desks where it's like a right-handed desk or a left-handed desk? Well, I get a right-handed desk. I'm left-handed. So I end up taking the test like in a cocoon here. Anyways, I managed to pass it that day, but a little bit of additional stress on my third exam.
People lose their minds on those tests. I mean, you study for 6-7 months and it's one day. And so folks are nervous. And I don't have a story like that, but I do remember trying to go to the bathroom and there's a line out the door. This is before the test. And let's just say more people were waiting to go number 2 because they were, their stomachs are in knots and they're turned up, and just it was bad. So I learned to find a bathroom that was off the grid, even if I had to sprint across campus, because it was just not a good place to be before the exam, the line, the smell, all that.
Odd question for you, but I was watching the Australian Open. I like tennis. I play tennis. I was watching the Australian Open, and there's a tennis player who's the second-ranked player in the world. Zverev is his name, from Germany. Fantastic tennis player, but can never seem to get over the hump. Doesn't matter if he's the 2 seed, the 3 seed, he just cannot win the big match. So my question for you, would you rather be the number 2 seed and never be able to get over the hump? Or would you rather be the number 100 seed where the expectations are lower and you make a very comfortable living? You're still recognized, but not as recognized as number 2 player in the world. Which of those personas would you prefer and why?
That's a really good question. So you're saying that the number 2 seed would never get over the hump. He would just be in purgatory and stuck there.
He might, but it's been several years of him proving that he can get all the way to the finals or the semifinals, and then he can't beat the top player in every tournament.
All of these athletes are racing through my head now that kind of fall in that boat. But I would probably say I would want to be knocking on the door to being the best player in the world, because you're so close. It's probably not a seismic shift. It's probably mental, really. Like you get to the upper levels of anything, the margins are so thin that one small tweak and that could break you through.
I agree. I think golf is the same thing. Would you rather be the number 5 player in the world, or would you rather be the number 75 player in the world? Both are making a comfortable living playing a game, but I think I'd rather feel like the difference between where I am and the best player in the world is not as great, and figure out what I need to do to get there. But I think I'd probably agree with you on that. But it's an interesting argument. The number 100 player in the world probably has a comfortable living. Stress level isn't probably quite as high, but you don't get to enjoy the upper ranks and the upper glories of the sport potentially.
Probably the worst part about being a number 2 and not being able to break through is you have to answer all these BS questions. Reporters are going to ask you over and over about what happened and why it finished this way or that way. That would get annoying, because it's not like the person isn't trying, right? They're trying with everything that they have, and they're giving their soul to the sport. So that would be the only part where I could potentially snap if someone asked me a dumb question after I just blew the big match or game.
Yeah, you see like Rory, I can't remember, the U.S. Open, I think it was last year, where he missed a couple of short putts coming in, loses by a stroke. Played fantastic, lets it go in the last couple of holes, and then he just gets out of there, jumps in his rental car. Yeah, I think the disappointment would be great that you were so close and yet came up short, and knowing that you're going to get the questions about, oh, what do you need to do differently? What happened out there? And it's like, hey, it wasn't my day. It didn't go my way today, but nice to see him come back and win a tournament to start the new year.
Rory got a lot of flack for that, and imagine you having a horrid day at work. You lost clients, market's down, you just had a terrible day at work, and you walk out to your car and someone shoves a mic in your face and tells you, hey, that was stupid, you did that, or you think about this. It's like, get out of my face, man. So I'll never shun an athlete for running to their car. I mean, that's their job, their life's work. Major disappointment. Just get out of there and reset, because I'd rather say nothing than say something outlandish, because they'd grill you for that too. So it's a lose-lose. Okay, so I checked my mail yesterday. This has never happened to me before. I got summoned for jury duty. And part of me wants to bail, but part of me is very curious, because I'm infatuated with the legal system, like the old school nature of courtrooms, the smell in there, I don't know, it's just kind of mysterious to me. So what's your thoughts on jury duty, and have you ever served?
I had the same allure with jury duty. I wanted to see what it was all about. I think it's natural. Signed up, call the number, don't need you. And then one time, signed up, called the number, hey, come on in tomorrow morning. We may need you. So I went to Oregon City. You sit in a room. All right, we need 6 people. They take 6 and they go for the first case. So I'm thinking I'm probably not going to get called. Sure enough, I get called. So then I get to go to the next room. So like you're getting closer and closer all the time. And I made it all the way into the courtroom, sitting in the jury box. And then the lawyers are asking you questions, trying to figure out, like in the movies, whether they can eliminate you or not. And I didn't get eliminated. And so then the judge gets up and says, hey, this case will probably be 4 to 6 weeks.
Yikes.
And it was my reaction too, because I wanted to see the experience, but I didn't have 4 to 6 weeks to devote to this endeavor. So I sheepishly raised my hand and said, hey, I feel like I'm critical at work. I own a firm. I don't think I could possibly, be away from it for 4 to 6 weeks. And they excused me and I got out of there. But so I've kind of taken it to that level, but I've never been on a case. And it was going to be an interesting case. I won't share the particulars, but it was going to be an interesting case, but I just couldn't allocate the time to it was going to take.
So my takeaway from that is you used that jury duty experience to humble brag to the lawyer about how important you were at work and what you owned and all the things you had.
I think that's fair. That's fair.
Okay.
All right, last question for you. This is a bit of a softball, but Pure puts out a lot of content. We do a lot of blog posts. We do podcasts as we're doing today. You do videos. I'll give you a couple of minutes, talk about why we do it and what you're looking forward to in 2025 from a content perspective.
Yes. So the biggest reason that we do it is build trust. There's a lot of voices in our space. A lot of them are loaded with conflicts of interest and misaligned incentives designed to sell. Content is our voice, and it's designed to cut through the noise, give people objective, tell it like it is in simple terms about what's going on. And I started the blog really for that reason, but I say the blog, but it's really all of our content. It really does sharpen your sword. So now the blog's almost for me. It's almost therapeutic for me, where I'm constantly researching, thinking about things to write about. It keeps me sharp. So it's my outlet to express my views about what's happening. And then this is a big deal, and I've talked about this a lot. And this is one of the big differences between us and other advisors. Most other advisors spend a great deal of time, I'd say over 50%, going out and finding business. They do mixers, they tell their clients to bring friends, they ask their clients for referrals, they're doing networking events. That takes a lot of time and money. Some firms even hire high-priced sales folks to gather assets. We don't do any of that, okay? Our content is our sales force. The blog, the podcast, the videos, those all live on the internet. They don't call in sick, they don't ask for a raise. It's a very streamlined, efficient way for us to get our voice out there, but also allow folks to find us. And we've been doing this for 8 years. We're starting to rank higher in Google. You search advisor in Portland, our name is at or near the top. That's how people find us. And it frees us up to do the work that people actually hire us to do, like run financial plans, manage the money, talk to clients. It allows us to run a streamlined, efficient, very cost-efficient firm. A lot of people ask how we can charge much lower fees than most advisors. That's a big reason why, because we're not paying expensive salespeople.
Nope, that's great. That's a good spot to leave it on. And I just wanted to, I think some people get a lot of stuff in their inbox and not be for everyone. But to your point, it's us trying to communicate with them, tell them what we're thinking about, what our view on our events are. So I think it's a great way to stay in touch with our clients. And as you said, do it from a relatively low cost perspective.
All right. Well, we're at the 30-minute mark. That's Happy Half Hour. That's Toby. I'm Nick. We'll see you next month. If you want us to talk about a certain topic or have a question, shoot us a note at insight@pureportfolios.com. We'll see you next month.